For this video, let's talk about the advantages of opening an LLC. An LLC is a type of business formation that stands for Limited Liability Company. Over the last 20 years or so, the LLC has skyrocketed in popularity due to its almost hybrid structure that offers business owners distinct advantages. If you're interested in starting a business or you just want to learn more, here are 3 of those advantages that may make the LLC the right choice for you. The first advantage is in the name. An LLC provides protection against personal liability, hence Limited Liability Company. In the event an LLC goes bankrupt or is faced with a lawsuit, an owner's personal financial assets are protected. That includes your personal cash accounts, your house, your investments, and any other business that you own that's unrelated to the LLC that's facing hard times. So effectively, you limit the liability to only assets that fall under the LLC's umbrella. That's a huge advantage when you compare it to other business structures like a sole proprietorship or general partnership. They do not offer limited liability. Oh, and one more thing. Just because an LLC offers protection against personal financial assets, that doesn't mean it's bulletproof. You see, there's this thing called piercing the corporate veil in which limited liability is removed in the event of misconduct. So I guess the lesson here is don't break the law and you'll be fine. The next advantage is LLCs are pass-through entities, which means that company profits are distributed without facing the dreaded corporate tax. Unlike C corporations, which almost all publicly traded companies are, LLCs are not hit with double taxation at the federal level. Double taxation occurs when there are 2 different periods of taxation, one at the corporate level and another at the personal income level. But in contrast, owners of an LLC only pay taxes on their personal income tax returns. And here's another interesting thing about the LLC structure. Profits are not the only thing passed through to its owners. You can also pass through losses, which means that the owners can claim those losses against their taxable income. Now, that's not to say you should intentionally be running a business that loses money, but in the event that you do lose money, you know that there are tax advantages to it. It all sounds pretty good, but pass-through comes with a catch. There's always a catch. Always expect a catch. By default, in the eyes of the IRS, LLC owners are treated as self-employed individuals. This means you'll pay hefty self-employment taxes, which consist of Social Security and Medicare taxes, on all of the company's profits. But wait, there's a catch. I'm telling you, there's always a catch. LLCs can opt to file taxes as another business entity called an S-corporation. In doing so, an owner gets the benefit of only having to pay self-employment taxes on his or her salary, not the whole company's profits. The way that this works is by separating a company's profit distributions into both salary and dividends. And those dividends are not subjected to self-employment taxes. Now, I'll be honest, when I first read about an LLC some time ago, the first thought that came to mind was, why don't I just pay myself a salary of $1? But you and I both know that the IRS would never let that stand. According to the IRS, the salary has to be considered reasonable. What's reasonable? Well, it depends on what company you're running and in what industry. I already know I'm going to butcher the hell out of the facts, but I heard of a story of some lawyer that was running a $3 million practice, and it was an LLC, but to get around paying the self-employment taxes on $3 million, he wrote himself a salary of about $100,000. And again, I'm destroying the facts of this story, so don't quote me. Well, when the IRS received his tax returns and saw that his salary was $100,000 and he received $2.9 million in dividends, they had some questions. But the lawyer was well prepared for the audit. He made the argument that the other legal practices in the geographical region matched the salary of $100,000. Therefore, it was reasonable. So long story short, he only paid self-employment taxes on the $100,000 and the other $2.9 million were dividends. Avoiding double taxation is the main advantage, but coming from someone who is self-employed, having to pay huge sums of self-employment taxes is, for lack of a better word, a major buzzkill. The last advantage I want to talk about is the LLC is user-friendly. And by that I mean it's not only easy to start, but it's also easy to manage relative to other business structures. To start one, you'll need to follow a few steps like filing articles of organization, getting your employer identification number, and creating separate business accounts. But one thing to note, the whole process and the costs are going to vary state by state. Now, maintaining an LLC will require both proper accounting and annual reporting. But compare that to other structures where ownership meetings are required and you have to record the meeting's minutes. An LLC is just a lot less logistical work. As a matter of fact, I'm actually going through the process of securing an LLC for this channel, which brings me to today's question. Are you thinking about forming or already have an LLC? If yes, for what kind of work? Contracting, real estate, professional services? Let me know in the comments. Time for a quick recap. The advantages of an LLC are the following. Number 1, it offers protections against personal liability. Number 2, it's a pass-through entity, meaning that company profits are not double taxed. Number 3, coupled with an S-Corp filing, company profits are not 100% subjected to self-employment taxes. And number 4, the LLC is user-friendly, easy to start, and easy to manage. And that's all I have for today. But before you go, I'd like to address the fact that the content of this video is a slight departure from what I normally post. All of my previous videos have been about investing through the lens of personal finance. And the reason why I made this video is I want to start integrating content about entrepreneurship. And if you're watching this video, I assume you care about money, or at least the security that money gives you. So when it comes to building wealth, investing is just one side of it. At the end of the day, you have to earn more money. And there is no better way to earn more money than through entrepreneurship. And look, when it comes to investing, every person should be an investor in some capacity. But I understand not everyone is interested in owning a business. To that, I say this. Even if you're not interested in owning your own business, you can still benefit from videos about entrepreneurship and business strategy. There is such a thing as the entrepreneurial employee. You have investing and you have entrepreneurship. Together, they're the pillars of wealth. If you want to build some serious wealth, you can't have one without the other. So this channel will cover both. And what's really exciting about that is I'm in the early stages of being both investor and entrepreneur, and I can't wait to share with you guys the whole journey. And I hope that you decide to tag along. That way we can learn from each other. Investing and entrepreneurship are difficult to do, so why do it alone? As always, thank you for watching. Until next time, take care of yourself, and best of luck.